Hello traders and welcome to the market opening preview on a Wednesday, December 16th, 2015. Big FOMC day today. Wow. That'll be 1400 hours on Wall Street. That'll be 2 a.m. Thailand time, and I will not be in front of my charts to listen to good old Auntie Yell. Janet will have to do it by herself. I won't be there with her. Traders, remember this brought to you through FXCL Excellence in Trading. Like I said, big FOMC day today. However, we have a lot of data to get to, and I'll get to that in just a moment. But I just want to remind you that this is brought to you through FXCL Excellence in Trading. And please come visit us at fxclearing.com for your trading solutions. Traders, we've got some news and all that good stuff, but however, let me introduce myself to you before we get started. My name is William Gilday. I'm your moderator for the Market Opening Preview Series every single trading day before the London Open. Traders, I will tell you that I do record this during the Asia session. So, of course, my candlesticks, if you're looking at this at the London Open, are going to look different than your charts just because there's probably about 10 candles because these are 30-minute charts. So there is quite a difference. It is currently 20:36 on Wall Street, and it is 8:36 a.m. in Bangkok, Thailand. Traders, I am coming to you from Pattaya, Thailand, and it is absolutely gorgeous outside. Bright blue sunny skies, white sandy beaches, nice cool breeze, and just a lovely, lovely day. Yes, I will not be trading today, traders. Today, well, I won't be trading until January 4th. The markets are going to slow down. Traders, I started trading in the year of 2006, 2008. I retired from a wonderful 27-year career out of the Fire Rescue Department out of the great state of Florida. 9 days later, I decided to come to Thailand for a 3-month holiday. Well, traders, I'm in my 8th year, and I'm still here in Asia, in Pattaya, and absolutely loving life. My second career is just as exciting as my first career, and it's stimulating, it's exciting, and you know, we didn't have the technology we have today where I'm not glued to a computer screen. You know, you can carry an iPad or an iPhone or a smartphone, and you can get all your data right in your hand, so you're not stuck behind a desk all day. You can move around and do some things like that, but I do spend a lot of hours in front of my screen. I'm always looking at charts for price action and price structure, candlestick patterns, support and resistance, and I do use two tools. One is I use harmonics, and the other one is I use Ikimoku clouds, depending on what instrument I trade. I do trade a different instrument in the New York session. So that's just a little bit about myself. I do listen to fundamentals. Now, I know when to stay away from fundamentals, and today is a day to stay away from fundamentals. You know, I do, unless you're like 100 pips in profit somewhere, and you can, you know, put 50 pips on the line just in case this thing whipsaws. This announcement from FOMC, you're still in the trade, you're still safe. But if you're only like 10 or 15 pips in profit or 20 pips in profit, folks, get out of that trade before this data comes out, because it's not the data release that I think is going to be the big one. It's going to be the statement after the data. And she's speaking directly after the data is released. So that is going to be the big issue, is what she says in her statement is what's going to move the markets and how the markets react. So you can probably get whipsawed at the beginning, and then she's going to make a statement, and then you'll find out what exactly the trend is and where we're going. However, like I said, that'll be 2 a.m. Thailand time, 1400 hours on Wall Street, and I will be sleeping when that comes about. All right, that's enough about me. Let's get over to the risk disclaimer, the legal stuff. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, news and commentary. Let's take a look at how the indices did. Dow 30 closed up 0.90%. The S&P 500 closed up 1.06%. And the NASDAQ closed up 0.87%. The small cap 50 in the green at 1.50%. We set it over to the Eurozone. Looks like a lot of green here. The DAX was positive 3.07%. The FTSE 100 was positive 2.45%. The CAC 40 is positive 3.16%. The Euro Stoxx 50 out of Frankfurt was positive 3.26%. Traders, let's head on over to Asia. Now, remember that these countries are currently trading as the Nikkei 225 is positive 1.71%. The S&P ASX 200 out of Australia is 1.86% in the green. The China A50 is also positive 0.31%. The Hang Seng out of Hong Kong is positive 1.54%. And our great friends out of Seoul, the Kospi, is positive 1.51%. So that just gives you an idea what is going on with the indices today. All right, let's take a look at what the economic calendar is. Now, the economic calendar today is full. Okay, we have a full day of events. We did have tick long-term purchases, and that was 1,600 hours on Wall Street, 400 hours in Thailand, which is 4 in the morning. So I wasn't around for that. 45 minutes later, you had New Zealand's current account came in at negative 4.75 billion. They were looking for a negative 4.85, so that was in line with expectations, a good number there. And what else is going on? RBA Governor DeBelly spoke today. I have no idea what he said. Now we move into the London session right at, well, an hour after the London session. We have PMIs all day today. There's no sense in me reading all these PMIs. Anything that's not a PMI, and they're all high and medium impact PMIs. I think some of the big news is the pound has average earnings index 3 months on the year, and climate count change. So I think that's pretty high stuff. And the euro has its final CPI year on year, which is really as a low impact, which absolutely surprises me, to be honest with you. Then we have, in the U.S. session, we have building permits and low impact, medium impact, we have housing sales. And then, of course, like I said, at 1,400 hours on Wall Street, we have FOMC statement directly after that. So quite a busy day today in data. So we need data. We love data. Data makes the markets go up and down, and that's what we want. I think probably the best advice I can give you is trade on a demo account. I would not be near this if I was trading live. There is just too much coming out at one time. When you have 5 and 6 pieces of data coming out at the same time, just let the data come out. You can get in the trade. There's nothing wrong with trading data. Just don't trade the numbers. Now, there are some people that trade the numbers and do very well. I mean, do you really want to trade the FOMC announcement, whether they're going to raise interest rates 25 basis points or 50 basis points? Like, do you want to really be trading that, or basically gambling and picking a direction and putting a pending order in for that? Nah, I don't think so. I don't think that's a good idea. All right? So that's basically my commentary. Protect yourself. Remember, what is the main focus of Forex? And don't tell me making money, because that's not the right answer. The right answer is capital preservation. Live to trade tomorrow, right? And if you don't have no money in your account, you can't trade. So live to trade tomorrow. And sometimes you just got to sit on the sidelines and watch the fireworks for 45 minutes and then get in the trade. Once everything is settled down and it's going to go the way it's going to go. Like I said, unfortunately, I will not be around for FOMC today. All right, let's get to the charts. This is the euro. Nice move to the downside yesterday. Really nice. And I'm just looking for this to pull back up to the 23.6. I want to enter this at 1.0947. We'll get out at 1.0910. It's a small trade. If it goes up to the 38.2 or the 200 EMA, man, that's even better. The farther it goes up and retraces, the better off we are for today. Being we do have a lot of data coming out, I think there's a possibility that we're going to get some good price action today in the euro and also the pound. Talking about the pound, let's head over and take a look at the pound. This trade worked out great yesterday. If you followed my trade analysis yesterday, the pound also did. Worked out absolutely fantastic yesterday. These big red candles happened in New York, and that was due to good data. And here we go. We're just looking again for the 23.6% pullback at 1.5073. We'll get out at 1.5031. Now you're saying, Bill, that's only 40 pips. Yeah, it's only 40 pips. If it goes higher, if it goes to the 50% fib, short it there. But I'm giving you like the basics of intraday trades. I'm giving you trades that you can get in intraday, grab your 40 pips and get out. Right? Make your daily bread and get out. If it retraces higher, that's a benefit. Right? I did put a star next to the 200 just so you're aware that that is there, and if it goes all the way back up there, great. We'll sell it there, right? The only problem with that is that's going to take a long time, and you're going to get too close to FOMC, right? Or you're going to get too close to all that data that's coming out of the pound. An hour after the London session opens, you get a lot of PMI data coming out of the pound, so just be careful about that. Let's take a look at the Aussie. The Aussie worked yesterday. Actually, did better than I thought. It actually did close to the downside. We're in a perfect spot to sell this, folks. We are at a psychological level of 0.7200. We want to get out at 0.7159. Again, it's a 40 pip trade, but we are in the spot. If you were going to take a trade, here's a place that you can take it. You can take it now because all of the Asia market news is finished, right? But this is a perfect spot, psychological level, all that stuff. We're just in a really good place to take this to the downside. Again, I'm very bearish in the Aussie dollar, and I've been that way for probably a year and a half now. Yep, just staying bearish, and no reason to go crazy. And if it pulls up higher, great. We'll sell it. If it gets above the 200 exponential moving average, everything's off, and we have to do another analysis. Okay? All right, let's take a look at the Euro Aussie. This pair is still in this range. It really hasn't broken out, hasn't done anything. And for me to enter this needs to get below this S1. So we're looking at like 1.5116. We'll take it down at 1.4961. It's a nice 60 pip trade, 55 pip trade. But we've got to get through this junk. This is just a massive amount of junk right here. And, this is not going to be fun having to fight this. But if it closes below that 200, then that, of course, that S1 pivot and our EA, which is our support line, man, I'm in for selling it. And let's just take it down. Now, the Euro Aussie is good for moving 100 pips a day, 125 pips a day, but this last 2 weeks has been pretty boring on the Euro Aussie, surprisingly enough. But these are 30-minute charts, so there's, I got a couple of days here. Let's take a look at the Euro Yen. The Euro Yen finally broke out of this range, finally. And we're at a decent spot right now. I'm just waiting for this candle to break below this daily pivot point. It needs to retest it, right? Retest and then take it to the short side at 132.95, and we'll get out at 132.59. Nice little trade there, 35 pip trade. And if it keeps going, keep going with it. Just trail it, right? Trail your stop, and it's going to be a free trade, and just do it. I don't like that this candle has a bullish candle above this daily pivot point. This can continue to the upside, folks. Now, if it goes up to that R1 pivot, and that's at 133.45, folks, if you get a bearish candlestick formation, more than happily take this back down, because by the time you get back to the 200, you're going to be in profit, and you're going to be way past break even. And, second time, usually she'll pop through, or the third time she'll pop through. So, tricky trade today on the Euro Yen, but at least it's moving. It's better than being in that range it's been in for so long. The New Zealand is in a great spot, to trade. The problem is it's too close to this 200 exponential moving average, and it's too close to my take profit area. I need a pullback. I need to pull back to this daily pivot, and I'll be more than happy to sell this. don't want to sell this here, folks, because I'm not sure, and there's no evidence back on the chart, if you open the chart up fully, how this is going to react on this 200 exponential moving average. So, and especially a day with today, there's a lot of data coming out. You know, regardless of FOMC, there's a lot of data coming out. So we want to be really careful and let this pull back, and then we'll get in at 0.6768, and we'll get out at 0.6737. I think we got a good trade at that point. So just be careful with the New Zealand dollar. It's a great pair to trade. I trade it all the time, but it's got to be at the right spot. And I can't remember the guy's name, but he always used to say, "Man, make sure your sidecars are lined up." And I just think that's something you just got to remember. Make sure everything's lined up, and then go for it. Okay. All right, traders, that wraps up our 6 currency pairs on a very, very busy Wednesday, December 16th, 2015. Can you believe 2 weeks left? And we'll be in 2016, 2015 will be history. Traders, on behalf of myself, William Gilday, and our great friends at FXCL Excellence in Trading, I want to thank you for joining me today. Today's a great trading day. Always remember to trade smart and not hard. Traders, we're talking about 24 hours. We're talking about what happened with FOMC and what this is going to do for trading and what's up for the rest of the week. I do think that the market's going to really slow down now once this FOMC comes out, and basically now until January 4th. It's going to be drudging and boring, and that's just the way it is. Happens every year. So I don't expect any change this year. Traders, have a great trading day, and we'll catch you later. Take care now.